This webinar will teach you the best moving average strategy for day trading Forex, an easy crossover strategy that anyone can use in all different markets. The strategy can be applied to Forex, stock, futures, options, and cryptocurrency markets. You may have heard of the moving average crossover strategy, but you most likely are doing it wrong. In this video, you will learn how to stop making mistakes and use the best moving average crossover strategy. Real quick, we just want to show you our disclaimer to remind you that this webinar is for illustrative and educational purposes only. All right, the worst mistake that many traders make is that they take positions when the moving averages cross over. When the fast moving average crosses over the slower moving average, the trader initiates a buy trade. This is because it signals the beginning of an uptrend. Conversely, when the faster moving average crosses below the slower moving average, traders place a sell trade. This is because it signals the beginning of a downtrend. Wrong. The biggest flaw to this approach is that it only works when the market is trending. Range trading markets generate multiple false signals. This will not bode well for your trading account balance. Another mistake traders make is using too many moving averages. This process delays signals longer, and this causes the trader to miss out on much of the trend. There is also too much of a lag involved in the timing of order entries. In this case, less is more. As you can see, we have recently a sell position from the crossover there. Here was a long position signaled here. If you had gotten in there and then get reversed to where it was giving you a sell position here, you would have lost money. You can see when this was an arranged trade, it gave a sell position that didn't work out. And then also here you can see where when we have a longer average or you're using more averages, that it takes even much more time to give you a valid long position or short position. This method works best on longer time frames. However, lower time frames tend to settle into ranges longer or have violent volatility. However, we have adapted this method to work on the 5-minute chart time frame on up. The key to this method is discipline and the entry order, the stop risk order, and the target exit order. Do not deviate from the rules. Many methods are very complicated, but this one is very simple. Make sure you follow the steps are followed properly. If you enjoy this content, please make sure that you like, subscribe, and share this video. We would appreciate it very, very much. Okay, so the first thing you need to do is you need to go to the www.forex-trading-unlock.com website. There is no login or membership required. Now you go to the workstation page. This can be found on the navigation bar, and you click on that. Now once you have that page pulled up, scroll down all the way until you get to a chart. Okay. Now remove the market information on the right as well as on the volume. X that out. That gives you a little bit more room, and there we go. Secondly, we will set up our indicators. First, you go up to this indicator tab here. You're going to scroll down to the moving average convergence divergence. Click on that. Right below that, click on the moving average exponential. Then you're going to scroll down even further and go click on the super trend. Once you've done that, we need to make our settings. Once we've done that, we are going to be all ready to go and start looking at trades. Okay, so in the EMA here, we're going to click on change the 9 to 200. Click on OK. And then we're going to go to the super trend here, and we're going to change the 10 to a 14 and the factor to a 2. Click on OK. We go to the MACD settings here. We're going to take the fast length and change that to a 13. We're going to change the slow length to a 21. And the signal smoothing length here, we're going to change to an 8. Click on OK. And now you can see we have a downward trending moving average here, 200 period. We have a super trend indicator here that when the market rallies above the red line, that gives you this green shaded area. That means the market is bullish. And conversely, when it falls below the green, the market becomes bearish, and that's where the shading is red. MACD here, we have the histogram in the middle, and then we have a moving average that is crossing over and trending either below or above the histogram. We take buy signals when the histogram, when the moving average crosses over below the histogram, we take sell signals. When the moving average in the MACD crosses over above the histogram. Okay, so now that we've got that, let's go over to our, here we go. All right, so for the Euro US dollar, we can see here where the market had been trending kind of sideways, and then all of a sudden we could see where we made a lower move low off a lower high. We made a lower high again. We made a lower move low. But then look at what happened here. We had the MACD crossing over below the histogram. Okay, we hadn't made a higher move high yet to signal that we would be getting into a trade. So there's no trade to take yet, correct? But then we had the super trend here, which was violated here. So we have this same buy signal. We have the 200 period moving average is starting to move up, and we have a buy signal below here. However, we didn't make a higher move high. So that's where we had this swing high here. We put in our order just above it right there, and that becomes our buy entry because we made the higher move high after a lower move low. And then also we use the last swing low as our stop loss right there. And then we set it to 1.5 times, and as you can see, we had a nice rally that yielded a nice winning trade. You can also see currently we have in the US dollar yen a trade that was triggered. So in this case here, we've been trending lower, lower move high, lower move low, but then all of a sudden we had a buy signal from the crossover in the MACD here below the histogram. All right, then the market here triggered a buy with the super trend, but that doesn't mean it's time to buy it yet because we hadn't made a higher move high. So that's where we use this last swing high here. We put an order in because we already have a pretty flat moving average. We have the buy signal from both of these two, and we know that if we trade and make a higher move high, that's our confirmation anyhow. So you have your buy order in there, and as you can see, the market got triggered. We'd go down to the last swing low over here, and then we have our 1.5 target area up there. So right now, currently, you can see the market's been choppy around, but it is right now right about at the entry price. So this currently is going on in the US dollar yen. And lastly, I want to show you how this does work even in the stock market on IBM today. Earlier, the market had a lower move low yesterday on the 17th, made a lower move high here, then we'd made a higher move low. Okay, so that was the first signal. The moving average was kind of flat. But then we had a buy signal with the crossover underneath the histogram, and then we had a buy signal here, which confirmed it with the super trend. Okay, but then we still hadn't made a higher move high, so we had to put our order in just above the last swing high, where this was a lower move high. You can see that it was triggered, and then we had the risk here was the last swing low down here, and we made 1.5 as our target to the upside, and you can see that the trade was successful. So if you follow these rules, believe me, you're going to have a lot of success with your trading. We hope that this has helped you. Remember to always go to www.forex-trading-unlock.com for all your Forex trading needs, and make sure you like, subscribe, and share our YouTube channel and Twitch channel out to your friends in the trading community. Thank you very much. Appreciate it, and you have a great day.